I'm pleased to be here live with Chris Kline,
Pleasure to meet you, Jason.
CEO of Bitcoin IRA, correct?
COO, Chief Operating Officer.
I apologize.
Close enough.
It's lovely to be here today. Thank you for joining me. You know, Crowdsource the Truth is not specifically an investment blog, but most of our viewers are very interested in cryptocurrency and the future that it holds. And of course, you guys are offering a very unique product. People can get into an individual retirement account with Bitcoin and other cryptocurrencies.
Absolutely.
Tell us a bit about that. It's a unique product, isn't it? Are there any other companies offering this?
There's a few. We're actually celebrating our second anniversary. We built the world's first Bitcoin IRA in June 9th, 2016. Not a lot of people cared about Bitcoin or cryptocurrency in general at that point.
Right.
What we did was we realized that there was a need. Somebody wanted to get into alternative retirement assets. We'd had experience in the past in LLCs, real estate, several other alternative type things you don't find at your typical Fidelity, E-Trade, or JP Morgan Chase.
Right.
And when cryptocurrency came across our desk, the real opportunity was, is this an asset class people are looking for, and can it be utilized inside this setting? And so we just built from there an ecosystem that allows people to have self-directed access to their exchange needs, storage and wallet needs, as well as custody needs, so that it can be held in a retirement setting. It has to be an arm's length distance from you. It's kind of all the rules and parameters that the IRS puts in play for an IRA setting.
Now, what is your background? Obviously, you're very knowledgeable about investing and financial instruments. Tell us a little bit about how you started.
Absolutely. So, kind of jumped into the self-directed retirement space in 2012, early 2012. Understanding that there was existing businesses and seeing a huge opportunity. Our goal was to be disruptive to this space. It's about $140 million a year that are traded inside of self-directed IRAs. I'm sorry, billion with a B, not million. Right. We would be the whole thing if I were with our numbers last year. So about that much sitting there. And the one trouble of it is it's a very cumbersome and archaic process. So if you're the typical investor that wants to do something, you want to just log into a website and buy an exchange traded fund and get exposure that you're looking for. Then you say, well, I'd like to have real estate or real precious metals or an actual business that I invest into. When you walk down that path, it gets a little bit more difficult. It can take weeks and there's more paperwork associated. So when we walked into that, we said, okay, we can probably make this a better environment for the average consumer. And started growing and making streamlined processes for LLCs, for precious metals, real estate, and then crypto. And crypto for us was, we really weren't knowledgeable about the space. When it came across my desk in December of 15, I remember going, are you sure? And then when I sat down with the custody solution partners that we work with out of Kentucky and otherwise, we had a reputation with them. We'd always been a company that did the right thing, and the customer was always won. We always dealt with any issues at a steadfast pace. And in this space, there's highly regulated, unregulated areas. And so to have that reputation of compliance and doing the right thing and being inside legal counsel, et cetera, allowed them to say, okay, we'll let you test the waters of something innovative here. Again, nobody cared. It was like the tree falls in the woods and nobody's there to hear it, doesn't make a sound. And suddenly, though, we found ourselves in the right spot. You know, entrepreneurship sometimes is partially luck. It's a lot of hard work and persistence. And we were in the position with our model when the wave came in 2017, where only 1% to 2% of the actual world's population woke up and realized what cryptocurrencies were. Right. But that had enough of an impact on the price space that you got into a mania phase late in the fourth quarter last year. And our challenge this year is to be ready for that next wave, because it seems to be the nature of this fledgling industry, and with all these different coins and just the amount of education that's available out there, it's going to have its continued volatility ahead. And we'll continue to be here and expanding not just the assets classes that you can put in there, but there's also how we're now moving backwards. What did we learn from blockchain? Well, if you understand how blockchain works, you see efficiency if you're an operations guy like me. So you see, okay, it used to take 2 to 3 weeks for me to achieve a task and involve 7 or 8 entities, and everybody needed to be a verification node to that. Sounds a little bit like a blockchain to me. Let's try and implement that technology, and that's what our team's focused on this year, is where can we go backwards.
Let me stop you for a second. So are you guys using blockchain technology in the Bitcoin IRA software to
Yes,
manage?
the platform. The platform itself is designed, the user interface is designed for that UX UI that gets you through, feels like you're just at home at Fidelity, but wait, I'm doing digital currency assets or alternative assets. What's happening administratively to achieve those things is going to have requirements in what we're developing as far as blockchain solutions. Now, these are probably going to be all private chain solutions. We're not of the tokenize everything crowd, if you've seen that in the cryptocurrency space where just token everything. Everything has a purpose for a token.
Right.
We look at application and efficiency, and then if that works, a secondary component of it could be a tokenization factor as a reward. They always exist, but if your main premise is to go in and make money out of it, like an ICO, then that's where you're focused at. We're focused at operational efficiency.
Right. I think the area that I'm most curious about and that our audience would benefit most from is understanding exactly, how cryptocurrency fits into this more traditional space. I see that you guys deal with Bitcoin and Zcash, Bitcoin Cash, Ethereum Classic, Litecoin, Stellar Lumens, Ripple. I think a lot of the people that watch Crowdsource the Truth are kind of confused by the...
What's what?
Yeah,
and absolutely.
We've been doing a lot of research into Steemit and the Steem currency associated with that. That's been associated with Daniel Larmer,
who's also
EOS. So there are a lot of questions about this. What I've seen with Steemit leads me to believe that particular currency is a Ponzi scheme. They have no physical office.
Yeah.
I come here, you guys have a very impressive space.
And we're not a token either.
Not a token, but yet you've got an impressive office space. I saw the sales floor downstairs. You're moving into this new, larger space up here. So just coming in here, my initial impression is you seem very knowledgeable. This is a professional space. When I went to Steemit.com's headquarters in New York City, mind you, that's a cryptocurrency with a $400 million market capitalization.
485, I think, at peak in December. Yep.
Right? No office. It was a P.O. box. So that gives me pause as far as putting my money there. And you did touch on the fact that cryptocurrency is largely unregulated.
Yes.
So what is the traditional IRA investor? I mean, after I closed my stereoscopic production company that used to be here in Los Angeles, I had to convert my 401k to an IRA, and I just put it in Merrill Lynch and leave it there.
It's a name you know.
It's made basically no money in 5 years. And when I first found out about Bitcoin IRA, Bitcoin was worth about $700 US. So I'm kind of kicking myself for not putting my whole portfolio in Bitcoin, but I know my close associate Charles Ortel would probably chop my head off for suggesting that. What percentage of someone's portfolio do you feel should be in cryptocurrency?
Yeah, absolutely. I mean, one thing is we are a platform-driven model, so we don't toe the line of financial advice, tax advice, or any of those things.
Got it.
Here's the technology, and here's how you do it, and we made it turnkey for you. However, with that being said, generally speaking, we have clients that put anywhere from 5 to about 20-25%. It depends on their risk tolerance. Everybody's in a different stage, and they need to seek that with their financial advisor and how this mixes into it. A lot have gone and knocked on the door of their financial advisor and said, hey, I'd like to get some access to this. And they kind of get the knee-jerk reaction, oh, that's just play money. That's monopoly money. It's not real. It's a bubble. It's tulip mania. The Warren Buffett, JP Diamonds, it's a fraud. And I mean, you had the slew, and it's still happening, of these kind of axiomatic statements about it. And they're basically, they're meant to sell press. And you have to consider where the source comes from. But having diversification in your portfolio, whether you're a 60 or 50-year-old gentleman, you know the importance of it because you just endured the 2008 crisis, the dot-com bubble, and we would go back for years and years of all the times where we get, literally speaking, a haircut in our retirement plans. Or for you, example, 5 years since the crash, there's been some epic gains made in the market space. But what you have access to at Merrill Lynch or others is either very conservative or it's the money down the chain. So you're not actively involved in the innovation space of our economy, which is probably why, in a time when I know the presidents and Congress are touting about great gains in the economy and everything's healthy and well, you can look at pretty dismal numbers in your 401k, and you're not alone in that regard. Everybody
it's just doing nothing.
It's languishing, and then you think of how is it offsetting things like inflation and hyperinflation that are sitting underneath the economy. That we can go down that road for a while. I've seen some of your podcasts before. You and I share very similar sentiments in that regard of what do you really know about the Federal Reserve?
Right.
So you put those two pieces together, and that's why I think where it gets people thinking. Now, let's go back to where your question was at the beginning. Is your users or your subscribers, your audience base, are seeing this slew of coins? There's, I think, 1,500 of them sometimes. Some days it's 16, 17. So
frankly,
which ones are
they're
which?
Put off by that.
Exactly. You do. You get put off by it because you don't understand what you're getting into.
Right.
What we do is, obviously, we don't give financial advice, but we only put onto our platform coins that have passed the litmus test of both us, the regulators for our custodian, the regulators for our exchange, the regulators for our wallets. Everybody is kind of gives a sign of approval as we go through it, and it's a communication piece. You know, is this something that's viable, or are we getting really close to this ICO wild west space that we shouldn't really be seeing people get into? And that comes down to understanding. I think there's three main core components of the cryptocurrency space.
Right.
You have the currencies like Bitcoin, which is a great example of it, where it's a decentralized currency, meaning there's no central banks, it's peer-to-peer, it's open transparency, open ledger, and it uses the blockchain technology under it to process those verifications of said payments.
Right.
Others like that, Zcash is another example. It's got a shielded privacy level to it, and those are some of those derivatives. And you can find these charts by just a simple Google search of a breakdown of what type of coin am I dealing with. Mm-hmm. Next, you have what I call the application technology sector. That's Ethereum and some of these others that are basically their technology is going to be used for smart contract technology.
Right.
So a contract between a doctor and yourself via all that paperwork we get in the clipboard when we go to the doctor's office, which it's 2018. There's got to be another way to do this. Those smart contracts may be a way where then we won't have the Experian days where all this and there's a breach and everybody in the world has lost a component of their privacy. You bring those in, that's what drives things like Ethereum. So to build those smart contracts and to operate them is going to involve the currency Ethereum or the token or coin Ethereum that's associated with it.
We've heard a lot about these smart contracts, but are they really in use yet? I don't know that I've experienced
minimal levels, nominal levels. Everybody's testing
them.
I think it's because they have to get comfortable, and there's a handoff in this economy taking place. The baby boomers, the greatest generation, are aging, and you don't normally see a reception to something brand new in that cycle of their life. But that's where the greatest concentration of wealth is at right now. So most ancillary businesses, banks or otherwise, whether it's doctors' offices or industries, are staying with, okay, these are the guys paying the bills now. We'll build towards what their need is. Now you go all the way back. I was just at a wedding in Mexico this past weekend, and I spent some time with a few millennials and had conversations with them. No, but I was spending some time with some millennials, and their conversation was, we just want everything out of our way. Now, that's a big gap between two pretty sizable parts of this economy. Now, all the money's over here, obviously, but in time, transitions will occur. In time, it's part of life. It's the cycle of what we go through. And that's, I think, where you're going to see more adoption of those smart contracts. I'm working on building them into our platform, where what you're doing when you make out a Bitcoin IRA or any account is you're establishing a custodial account with a third party. You're funding it by explaining to one group that you want the money over here, and your rollover was a check, and sometimes it's a transfer. And then you're directing those investments. I want to buy this. And all that involves some form of paperwork. And what we're aiming towards for 2019 launch is something that is a smart contract private derivative inside of our ecosystem, so that all those things are real time and instantaneous. And you'll see those rollouts. It's a process. So IBM is a great example. They are doing a lot with blockchain technology and with utilizing the tools of that technology, including smart contracts, and understanding how they can they've been that kind of cohesive unit of business for a long time, right? They're the technology at the core of two businesses that want to operate together. And now they're seeing how they can take these applications there. But again, it's something that's going to roll out, I think, in time in that. And another one that's in that is not just the smart contracts, but the technology for banking systems like you see with Stellar Lumens and with Ripple, where it's to streamline payments, where we're getting these escrow services and having to validate and those things can happen in instance instead of waiting 2 or 3 days for an international bank wire that costs you $500 to process. That's kind of coupled into that. And then the third is, and this is where I think we get the most distracted in our space and where people outside of the space get turned off the most, is the token world. The in-app tokens and or utility membership type tokens.
I don't know that I even understand the difference between a coin and a token, and I know that that's a very stupid question, but this is the type of
It's hard too, so don't feel bad.
What is the difference?
The difference, in my opinion, now everybody has different ones, but a coin to me is something that is a currency that is utilized as a reward or as a means of exchange in crypto space. So Bitcoin, means of exchange. Litecoin, means of exchange. Ripple, and those are using technology, and the technology rewards them for using it, and then they pay.
So Steemit is a token.
Steemit would be a token.
Steemit's a clear token. Stuff on
you're putting content on the social media site, and you get a reward token for it. Now, there's a place for these. I'm a big golfer, and I just bought the domain mybirdiecoin.com. Same concept. You could earn a coin for doing something either in an app or in real life. However, is that economic?
So you get a birdie in golf?
Yeah, you get a coin. I mean, it's a very abstract thing.
How does that make any money?
It doesn't. And I'm not putting it out there in the space. That's where the differentiating factor happens. Is there's these groups that think they have the next great in-app token, that because our platform is going to be so successful and everybody's going to be using these tokens, they're going to be so valuable. I pretty much walk the other way when the pitch looks like that between you and me, and our users obviously today. So when you find groups like that, I try not to pass judgment on applications of blockchain technology because I want to see it occur. But in time, you will see those winners and losers, and it matters about value. Are you bringing value to the table? Will Steemit bring value for some users? Probably yes. Will bring enough for so many users that the rewards token builds value because of the propensity by which it's being utilized? That's a question mark for the success of the business, not the success of the currency. That's how successful will this business or platform be.
And we'll talk about that some more in a moment. I wanted to ask you, I'm not sure if you saw during the North Korean summit, of course, Dennis Rodman joined President Trump. He's got a personal relationship with Kim Jong-un. And as unconventional as Dennis Rodman is, he was also advertising the fact that he was sponsored by Potcoin.
Yes, I saw the T-shirt.
Now, that's a cryptocurrency designed for legalized marijuana transactions. I think most people know that, of course, even in states where marijuana has been determined to be legal for sale, it's still federally illegal. So these legal businesses have the problem of needing to deal exclusively in cash.
Yes.
Now, this seems like a rather unique and interesting application for cryptocurrency because if someone's running a marijuana dispensary, I mean, I see these places, they got guys with machine guns and everything because they're dealing with obviously thousands or hundreds of thousands of dollars worth of cash. What do you think about this Potcoin? Is it a...
I mean, it's definitely, it has an application. There's a real world solution that's needed. And I have a friend in the banking world. He was actually in U.S. Bank for many years, and I'm from Denver originally, so that was like the spawn of this whole thing. I actually left Colorado just as it was legalizing.
So legalized
and then came to California and it was already medically legal here. So didn't feel like much of a transfer for me. Now, Denver has changed drastically in that, in what it's done in its socioeconomic world, what Denver looks like, how it behaves, all those things. And what he was successful with is he built mathematical algorithms of risk for entities that want to bank with cannabis-driven businesses that are normally cash-heavy. So there's already players there, and he's out here in California, he's in Michigan, he's in Washington, he's in Alaska, he's on the forefront of all these places. And from what he tells me is it's a comfort level that you're looking for. Now, is that comfort level derived from what he's built, or could it be derived from an alternative currency that people could use between them? Problem is, cash is king, and U.S. dollar is still the biggest hat in the ring at this point in time. So if you're already an industry facing what cannabis is facing, and then you couple it and you surround it with a blockchain ecosystem of cryptocurrency, you kind of almost got hit twice on the way towards legitimization, because both those industries are struggling with regulation and with brand and reputation. I would say that cannabis and Bitcoin and blockchain have kind of been parallel in this process, and you saw a wave of regulation take place at one point in time with cannabis as states were either voting or not voting for it, or the federal and state level fight about it and what's happening. The same is happening in digital currency today. We have CFTC and FINRA and FinCEN all trying to figure out what are we, how do we define what we are, and who regulates who we are. Well, I'm enjoying this process. You would never usually see an entrepreneur smile about regulation, but I think this is a space where it's mandated. There's just too much, like you said, a regular user is so confused. We need to weed out bad actors and define spaces of what these things are and how they should operate. Is it a security, or is it a token, or is it a token security? Is it a currency? Where does everything fit so that there's normalcy for the investor or for the user of that technology? And we're getting there. We've sat down so far as us and our new Chief Compliance Officer, Marianne Bullion. She's actually former special counsel for the FDIC on financial crimes. So just like a lot of Wall Street guys have jumped over into the crypto space, we have even regulators jumping over here saying this is a place that wants to be regulated. How can we build this together? And we've had such successful conversations with those groups so far in those states, which is that's where you found the success in cannabis too. So it's every industry as it grows is going to have this stage of, I guess it's like it's the first shedding of a dog, or like, I don't know if you have reptiles when you were a kid, and you have to get that. You have to go through those growth stages, and so it's exciting. But for the user, take the time to get educated. Don't make don't make assumptions. I'd say don't get lost in analysis paralysis where you spend months reading white papers and never do anything because, like you said, you're kicking yourself for not having moved some funds over and seen those gains. But also don't make knee-jerk reactions based upon sound bites. Same thing that you should do when you vote, in my opinion, is that you need to do just enough homework to know what you need to do. Don't get lost, don't go down the rabbit hole and become, completely politicized in your life because you won't have any Facebook friends by the time you get through it. But also don't just listen to the regular news and get a few sound bites off of one of the debates that they do at the end of every election cycle. Do your homework. Find out how is it going to affect you, and the same thing with digital currency and otherwise. Portfolio diversification, there's not a financial guy in the world that will tell you that's not a bad idea. It's generally speaking is what you should do. So now you have this new sector of digital currencies. Look for the ones that you're most comfortable with. I have guys that I work with. Our CEO, he has his account here. I have my account as well. And there's things, I'll go a little bit more. I push the envelope. We're just launching Zcash and Stellar Lumens this week. So I was the first to put it in my account as a test. Our CEO, he sticks with the Bitcoin and the Ethereum, but everybody's got their flavor and find what fits for you. And that's what our platform is all about. It's just empowering that process.
And what would you say to people who have heard that there's a limited number of whales that can control this market? I mean, when I look at the Coinbase results, it seems like all the charts, they're moving in a very similar fashion, it seems. What can we tell people who have that concern?
Absolutely. Well, I always say whales are everywhere. I mean, enough rich guys can get in a room together and bail out the banks. Buy a stock or sell a stock, but same difference. So they're there. They exist in the world today in almost every cycle and every industry niche that you find. For me, you can read articles about how to trade into the whales and against the whales. There's books written about it. I kind of look at it as if they're going to exist in every space, be aware that they're there and know that as volumes and mass adoption occur, that's going to defeat the purpose of a whale. And we've already seen it in even thinner traded times than current today in volumes. And I think it was October 2014, whales sold off, dumped 30,000 units of Bitcoin when it was going at about a price of 300. Now everybody said this is going to destroy the Bitcoin system. Here it is. It's over. Bitcoin's dead. I've seen that plenty of times in the newspaper. Sure enough, there was enough buyers because more mainstream adoption was occurring in that parallel time space that it went up to $375. So while a guy's selling off such a large chunk, the price is actually going up because there was many buyers to mop that up and then want more. So just like in any other market, it's got a higher VIX rating. If it had a VIX, it would be off the charts type of VIX. But if you know the volatility's there, most are what we call hodlers, and the source of where hodler came from is hold on for dear life, was it a guy that did it on a post a long time ago? The mystery is out there, like Satoshi, the mystery, and that's what I love about this industry. But if you're a hodler, then you're not taking and grabbing the money you need in 3 months to pay your rent or your emergency fund and putting it into crypto and hoping that it doubles over time. You're looking at this as a longer term investment strategy, something where you're going to utilize it, maybe make changes in it, but it's not something that you're dependent upon those funds in the near or distant future. So that's probably a good direction to head in that regard.
And you mentioned Satoshi Nakamoto, the mysterious, unknown, is he real, is he AI, is he multiple people?
Is he Alan Greenspan?
Is he Alan Greenspan?
I've heard them all, yeah.
I mean, this is a very unconventional way for any kind of new technology product. I mean, we always associate Steve Jobs with Apple and Bill Gates with Microsoft and Elon Musk with the Tesla and all that. It seems surprising that someone would not be directly associated with Bitcoin. And in the case of Litecoin, we've got, what is his name?
Charlie Lee.
Charlie Lee.
And Vitalik
sold
with
all
Ethereum.
of his Litecoin. I mean, if Mark Zuckerberg sold all of his Facebook, how would
Facebook
investors react?
Exactly.
I mean, it's a very...
And we saw that impact with what happened with Litecoin. You know, this is a non-traditional space, and it's a disruptive space. So you're going to see things in different ways. I can't justify what Charlie Lee did in selling.
What did we see with Litecoin? It went down?
It did go down. It did. But a few days later, it's back up. I think he had done those sales, and just after the mania phase, he'd been selling off. Now, people are always buying and selling off holdings all the time. It's just a standard thing. The way that, I bring it up is you look at, there's Vitalik for this and this, and who is and what is the driving this factor? I think it's more of the public sentiment. The reason I think what drove and catalyzed this Bitcoin charge and this blockchain charge was, if you notice, the timetables are very close to right around when the financial crisis of 2008 occurred. So people lost trust with banks. And then as a result of what the banks and the government did to get through it, we lost trust with both factors and how much separation between the two really exists today. decentralization is amazing. I mean, that's just something, it fits. I'm a precipice baby. I'm born in '85, so I like know old school, the old school way of things. You know, before cell phones, I had a pager at one point in time. Like, that was the cool thing to have. But then I also grew up in my kindergarten class, and we were the first ones, that first class, to have a whole room of computers. So we were bred into the digital age. And for me, I see that that's an exciting disruption era, and we don't necessarily need a face to everything that makes it. While in years past it's been nice to have a face of something, Apple still is very vibrant, even in the after Jobs has left us, and it continues to evolve and innovate. Digital currency is such a disruptive nature to things like the Federal Reserve and otherwise, which also are faceless. You know,
but in the case of Apple, I mean, I would equate Bitcoin more to a technology product than the Federal Reserve. But it's a good point that it's somewhere in between.
I'd lean it more. I'd lean the other way more towards something like the replacement of something like the Federal Reserve. And now, is there world universal currency?
Will do that? Will it replace?
I think it'll compete. I think it'll compete because fiat money. I mean, we could go back to Bretton Woods. We could go back to Nixon shock. We can look at historical records, ask the Romans, ask the Weimar Republic, ask people, citizens of those times. Everything seemed peachy, and then it wasn't. And that is the reality of what happens with fiat money, is everything seems peachy, growth levels, everything balances its way out somehow, job rates stay where they're supposed to, and then something catalyzes. And what my grandfather always used to say to me, you know who's wearing shorts when the tide goes out? And you have the U.S. dollar's been printed in quantitative easing and off of a gold standard for quite some time. That was a growth curve that just went like this after the financial crisis in 2008. Can everybody still hear me? Can you?
Yes.
Okay, just didn't mean to drop that.
No problem.
And that exponential growth curve takes place. We don't know the impacts of that. And who followed us? The Japanese started doing it next. The European Central Bank did it next. The Bank of Brazil. They've all done it. And now it's like, okay, I guess we're just the cleanest dirty shirt in the dirty laundry hamper. I studied international finance most of my life. I'm a big into Forex and understanding how currencies coexist with one another, especially in a floating system like we have today. I think nothing's pinged since the Hong Kong dollar back when it got pulled off the U.S. dollar in the 90s. So this is an era. It's a part of the economic shift from barter and trade to gold standard to fiat. It won't last forever. I'm not a conspiracy theorist, but I think the longest standing fiat currency is somewhere between 45 to 50 years old. The U.S. dollar is coming right up on that level as far as how long it's been off standard.
We're there.
Yeah, we're there or have not passed it. We're not like, what do they call it, 1159, the 1100, or the 59th second of the 11th hour. It may seem like forever, but it's actually a very short blip in time, and that may be where we're at right now.
Yeah, I mean, 1973 was when Kissinger and Nixon created the petrodollar.
Yes, and that was in replacement of the Nixon shock that took place in, I think, 71. So it was like 2 years of legislation to figure out what was going to happen.
And now we're tied to Saudi Arabia and OPEC and the demand for oil.
We're at the mercy of something always, right?
China, within just a few weeks ago, created the petro yuan. So we haven't heard that much about that in the news.
You don't, nor Venezuela's cryptocurrency that they created to try to get themselves back into the mainstream market of oil trading.
What's going on with that?
Venezuela, well, it's obviously, we all know what's happening in Venezuela. We saw the riots and the things. Hopefully, your users, it sounds like they're astute enough and out there and open-minded enough to see other things than just what is on Fox and CNN.
Yes.
There's real world problems happening. There's hyperinflation, there's devaluation of currency, there's a large income gap that's always existed there that's really having an effect socioeconomically. And part of the solution of their government is that if our national asset is oil, if we can tokenize that, perhaps we can make it easier for people to trade our petro and do it in a more transparent fashion and not at the mercy of a U.S. pen dollar. Because basically, if you buy oil in this world, you have to first go and take your money and turn it into U.S. dollars to buy oil. That competes with that model. Will it beat it? I don't think so. I mean, let's be honest, we depend on the petrodollar for the sustainability of our currency right now.
And kill anybody who seems to defy it.
Exactly. And guys always joke that the Federal Reserve is watching guys like me because we're in the crypto space. But I see this decentralization, immutability, transparency. Call me like a Democrat, like a democracy guy at heart or a patriot at heart, but I'm a proud American. I'm proud of the freedoms and things we have. Have we fought for them? Absolutely. And digital currency will be another one of those things where we can get ourselves unhinged from a central system that creates the haves and have-nots and creates some of the things that we see where it's not as transparent as we'd like it to be. And this is one of those places where the essence of democracy of money. And when people start understanding that, then they start to understand how easily it can be used across borders with borderless payments, technology to make things so much easier, and efficiencies make consumers win, and humans win when consumers win at the end of the day. Right. So all those things come together. I'm not living in a utopia. I know the real world things take time, right. But there's a true revolution or disruption taking place, and we're happy to be a part of it. I know I am, at least.
So now, you guys have been around for 2 years. Can I ask how many clients you have and how much money you're managing right now?
We have just over 5 or 6,000, somewhere right in there, of clients in just a few years. Exponential growth. It was just unprecedented for me as a young entrepreneur. Right. And I think we did about $130 million in deposits last year.
Wow.
We've already beat that number this year. We beat it around April.
So that's people are buying Bitcoin
putting into the IRA and then using those funds to purchase digital currency on our platform.
Right.
And then, obviously, assets under custody, because we don't manage funds. This is all self-directed. But under custody, what's sitting in our platform, it peaked at $600 million at the mania phase, and we're now still at about $500 to $550 million of value. We joke that we made more millionaires last year than Harvard MBAs.
That's pretty good.
Well, without the college debt.
Right. And of course, there has been a pretty shocking drop in the price of Bitcoin just in the past couple of weeks. What do you attribute that to? You see that, or do you not get into that?
I can attribute to a few things. I can certainly attribute to regulatory framework. So, like I said, we're shedding off that first growth sector, and now we're going into the next stage. There's some uncertainty that comes with that. Who will regulate us? What will be defined? Just yesterday, they announced that the SEC announced that Ethereum and Bitcoin are not securities. That question was out there. Are they securities?
Well, I thought they're supposed to be currency.
Exactly, but the definition hasn't been actually legally defined by a group.
No one's really buying anything with them. They're investing in them.
They're investing in them. You can buy things. Lamborghinis have been purchased, as everybody jokes about the Lambo, the boys, Bitcoin boys with their Lambos. There's real estate in Miami and New York and Los Angeles that they're only accepting Bitcoin as payment. So they're limiting themselves down further. If you go, they did a Craigslist study, and it was like 85% of cars on sale at Craigslist are accepting cryptocurrency. Wow. So it's out there. It's becoming, can you go to Nordstrom's and buy something with Bitcoin?
That's what I mean.
That's coming next. And it may not even be Bitcoin. Bitcoin, people look at it more store value, gold 2.0. So now all of a sudden you have, would you go chisel off a piece of a gold bar to go buy some coffee? No, not if you're a smart guy, because you understand the finite nature of gold and how do you want to, it stores value and wealth for you over time. But Litecoin, for example, it's got 4 times the mining speed. It's lower transaction fees, lower cost, lower mining fees. All the reasons for it to be a transaction payments record. So Litecoin may be something that you see accepted. Do we know which ones will win? There's several others that are fighting for those positions. Zcash is another one that allows the shielding of payments for your privacy. So it's like you're not telling the whole world what's in your bank account, which we don't like to do. Those are all vying for that position. But I look at my Bitcoin, like you said, it's an investment vehicle, store of value, and it's sitting there. It's kind of like, I mean, I'm a precious metals holder as well, real estate. I have a very diverse portfolio. But to me, it's just got the utility. It's a finite 21 million ever be mined, and people look at it as that continues to happen. I mean, there's groups. Tim Draper's calling for $250,000 Bitcoin, I think it was, by the year 2025 or 2029.
You think that's going to happen?
I mean, I won't put like those huge, because I'm not Tim Draper, I'm just Chris Kline. But I would say that I incline to agree with growth, though. I incline to agree with that we could be by mid 2019. I don't like to put it like it used to be. At the end of the year, it would do this, and it would do it. Now it does it over cycles. So I would say within the next 12 to 18 months, we could see 2025 again. There's plenty of things pushing it in that direction. And there's answers being made about regulation. So people like you and your listeners can feel more comfortable at the space. When that happens, that's when you're going to see more mainstream adoption. And that drives pricing for sure.
So you're still bullish, but you're not planning the John McAfee style meal.
No, not quite yet. Not quite yet. But I think that it's, I mean, I have a 4-year-old daughter, and for her, she's got a college savings plan that is designed in kind of a Roth mechanism using IRAs and my experience with IRAs. And she's got Bitcoin and Litecoin and Ethereum in there. I started with Bitcoin. I just add as I can for what she can contribute towards it. But by the time she's 18, 19, headed to look at college, I can't think of any assets like the 529 Gerber plan or anything that's going to make it to afford college. I mean, I was at about $20,000 to $30,000 a year when I when I went to college in 2003 to 7 in University of Colorado Boulder, and I know it's exponentially grown since I left, and it's just going to keep going up. So if she wants to go that route, she's going to need a good chunk of change in order to do that. And so for me, it was a no-brainer. What else would I put in there? Then what has the potential? And so far, she's happy with Dad.
And she's like, Dad, pretty good return.
She did. Thanks, Dad. And she likes learning the new coins. I'm actually teaching at her preschool this month, just sitting down with the kids and teaching them a little bit about currency, how money works, barter and trade. I mean, it can't get too deep, but it's something where I'm going to dress a few of the guys from the sales floor up as the Bitcoin logos and things like that. Make it fun for them.
That's pretty good.
But I think that our true demographic has yet to be born, and that's the beauty of how transitionary and generational that this industry will be. There's people, we've had 60, 70-year-olds buying it and adamant about getting in for diversification. Then you go to the millennials that are starting their first IRA and they want to put it in digital currency, and everybody in between. And that's the most exciting part about this space, is there's no you are a buyer, you are our type of buyer. And women empowerment is huge in this side. I've been in precious metals, LLCs, real estate, never seen the percentages of women actively involved in this. Normally it was, oh, my husband's doing some, so I'll do some. Now it's, hey, my wife made like $250,000 last year with you guys. Can I put some of this in my account too? Which is great to hear, because we know there's wage gaps, income gaps, all those things. So it drives empowerment in a lot of different areas of society we don't normally think about.
But people aren't, you're not taking money out of the IRA. They're just watching it grow by 200.
Yeah, they're watching it grow, and then if they want to liquidate and go back to U.S. dollars, they can. They can also go to new assets.
Tax penalties, aren't there?
If you're in an IRA, no. See, that's one of the reasons why people say, why'd you do the IRA? Well, if I want to take $5,500 and put it into Bitcoin when it was $200, and it grows into $25 million in 5 years, and I did buys and sells along the way, if I had to pay up to the capital gains tax man every single time, I would probably end with a value of about $15 million if I did all the same trades equally. And that's the impact of getting taxed and then not having the purchasing power for the next trade to come into. And if you're in outside an IRA setting, that's the reality. You are going to have either short or long-term capital gains. And that's, everybody has their own setup to it. Generally speaking, that's what happens. In an IRA, if you're in a traditional and or a Roth, it's either tax-free or tax-deferred growth. So if you take and put $5,500 in your traditional IRA, like you did with your 401k, that lowered your taxable income for the year, right? They're doing that contribution. You got the corporate match, hopefully, and you lowered your income for the year, so your tax bill was less. That's an advantage on the way in. Now you're in and you buy and sell and you watch that 5,000 grow up to 500,000. You had no taxes the whole way. The next time you have taxes in distribution, when you start taking it out at the age that they require you to take it out. With Roths, you pay the taxes on the way in, so you don't get that advantage of lowering your tax income. But when you take it out down the road, it's completely tax-free. So that $5,000 you pay taxes on, whatever the rate may have been, even if you paid 50% tax is $2,500 is going to be far less than anything you could pay on $500,000. So the setting of an IRA and retirements, if your audience isn't looking into those things, I just do it. Get the education about it, because this is the earlier you can get started in it, the better off you'll be, and you won't need high velocity assets like Bitcoin to help catch up.
And if people want to get into Bitcoin IRA, what's the best way for them to do that? Online,
honestly, at bitcoinira.com. The top right, I believe top right's got to get started. It's our whole self-serve platform's right there for you. You can easily start your account. Our team will help you fund it, and then once the funds arrive, you'll be able to execute trades. The last piece of technology is rolling out in the next 2 months. Our goal was to have people that wanted to trade on Christmas to be able to do it on Christmas. We're well ahead of that. We're about 6 months ahead of that timetable right now, and we'll have 24/7, 365 trading for users here in the next few months.
And people can, of course, call you at 877-936-7175. So is Bitcoin IRA also an exchange? People are giving you US dollars, or people coming to you with Bitcoin?
It's with an IRA, if you are opening a new one, you have to do it with US dollar, unfortunately. And it'll be established and deposited at the custodian, which is a trustee sort of regulated by the South Dakota Board of Directors, all the things it needs to have. If you have existing, unfortunately, they never let you do in-kind contributions. So if you're holding Bitcoin and you want to put it into an IRA and see those tax savings we were just talking about, you're going to have to go back to US dollar, move it over, and then get Bitcoin. And that's US rules. That's IRS rules. There's no in-kind contribution. They need to know that you actually took $5,000 and valued it. If there's this discrepancy of what the real value was, it gives them more work, and as we know, they're already overworked counting all that money.
They're not doing much as far as investigating the Clinton Foundation, so I don't know what they're doing as as far as being overworked. The IRS.
Well, they seem to be. I hear the average hold time nowadays with the IRS is in the hours, not minutes anymore. It's in the hours, and
Wow.
they just keep down staffing. So it's, who knows? It will be interesting to see what comes. This is a very transitionary period, I think, the next 10 to 15 years. Both politically, economically, there's going to be a lot of change. And those with a head on a swivel, I think, are going to be the most successful.
And while we're talking about time, you know, I've done some transactions with Bitcoin. It seems to take days to convert it. I mean, how is that modern technology? Why isn't it?
Well, that's where you have KYC, AML, and those requirements. So when you are the Coinbase of the world and you open yourselves up to everyone, or the GDAX or the Poloniex exchange, you're going to get bogged down by guys that are doing $20 or $10 or $15, because for that same guy, you've got to do know your customer, anti-money laundering, all the compliance steps to be part of this new regulatory framework. This is where that laissez-faire and the inefficiency of government and business, you can see it right in front of you in this industry right now. So what happens is when it gets crazy and everybody wants to get in, you'll have 8 days while they have to onboard you. It's not because it takes 8 days to onboard you, it's because there's 10,000 people in front of you and they're backlogged. And we saw these waves take place throughout 17. Our model is people start with 5,000. We normally, our minimum is normally in the $10,000 to $20,000 per asset. Right now, because it's our anniversary special, we're actually doing 2 years, or the minimum investment of only 5,000. But that gets rid of all those guys under 5,000, so that our system can just service people that are looking for this purpose. That also allows us to have more ability. They don't want you just to walk in and say, I want to buy $50,000 worth of Bitcoin. They know nothing about you. You can do an ACH withdrawal. You can shut down the credit card that you're funding it with. There's a lot of things you can do that can give them risk exposure. So they're going to limit you, and it's going to be $1,200. Then you can maybe buy $2,500. Our model is designed for once we get you onboarded, which can be 24 hours, 48 hours. If you can fund it via bank wire the next day, which some people can, some banks take a few days, then you're off to the races. You're running, you're doing the thing. We have to go through our KYC email as well, but our platform is just very efficient, and we're not getting a slew of customers like Coinbase. I applaud their success and what they're doing next. They're a great company. They're really, I appreciate having them as a leader in our industry. But there's always going to be that challenge of, jack of all trades is not good at one particular thing. And so when you're opening yourself up to mass market, efficiency becomes an issue. I think that for the next run and the next bull run that takes place, the companies that have really learned what happens in a run and evolved from it are going to be even more successful. And I hope we're one of those. That's what we've spent this time, where it's the market's a little bit quieter. We're still doing well as a healthy business, but we're taking the time to invest in when this gets crazy again, because it will, be prepared. And for users that want to get into it, do it when it's quiet. If you try to set up a Coinbase account right now, or even with us, you're gonna even see it move faster than you would, say, December. We had 3,000 or 4,000 phone calls a day in December.
Wow.
I couldn't staff fast enough. I mean, we went from 5 employees to almost 80 employees in a matter of 6 months.
Wow.
And that's a challenge in and of itself. And every other crypto company is going through those same growth pains. And users, I mean, we had people that would wait an hour on the phone just to make sure they could open an account that day. Do it now when we don't have people waiting an hour on the phone, and then you just get positioned. That's what people don't think about is, oh, I'll do it, and then it's too late. If you get yourself open an account, doesn't mean you have to buy Bitcoin today with Coinbase or any of them. It's just you're in position. Just like if you wanted to get into stocks, you wouldn't just leave your money in a bank account. You'd move it over to a brokerage account so you could buy stocks. Same concept. Just get yourself ready.
That's impressive growth for you guys. You know, as I was coming up here, Mike told me that you guys actually license your platform to other Bitcoin IRA
Businesses. Yep.
businesses.
Yeah, we did that in December. We started, basically, we were the first to do it, and we had some really honorable partners. Our custodian out of Kentucky, basically, we've always been on handshakes over the 5-6 years we've worked together, said, you guys created it. We don't want to give it to anybody else. Like, it's just, that's not fair. So could you white label it? And we started stirring the idea around and realized that we could help protect an industry by doing it that way. Rather than closing the doors and saying, we've got all the technology, it's all proprietary, nobody can touch it. And then people just try to figure it out, and they make subpar products which put consumers at risk.
Yeah.
Let's open the doors and let's be collaborative, which I think has really helped propel our success, because we're taking that collaborative approach in our industry, and it's giving us a good brand and reputation.
Well, I'm very impressed, Chris. I mean, I don't know that I understood everything that you've said, but I'll go back and review the video. And is there anything else that you think you'd like to leave our audience with before we wrap it up here?
I just remind him of my analysis paralysis statement. It's when you get into crypto, my first few months into it, I literally locked myself in a cage. I had my wall cave drawings everywhere, hieroglyphics, mapping things out, trying to understand every facet of this. And you'll really lose your mind trying to do that. But get a good general knowledge. Our site's a great great place that just has all kinds of knowledge-based content on there. You can subscribe to our newsletter that has even more that comes. Take the time to do that, and then don't just knee-jerk try to react the next time it's already going crazy. If digital currency is the thing for you, do your homework and do it when it's quiet. Don't run towards it like everyone else.
I see there's a lot of educational information here. What is Bitcoin, price charts, etc. When was that you bought your first cryptocurrency, and what was the cost of it at the time?
Bitcoin, I believe it was March 2015. So we were sub couple $100, I think, at the point in time. It was right after the big jump to 1,000 and the straight fallout, and then there was kind of that, and that was just to try it. I mean, and I still have it. I've never gotten rid of that particular unit of Bitcoin that I purchased. I'm a kind of a long-term hodler. I've traded a lot of other ones. My first Ethereum trade was in April of last year in 2017. My first Litecoin and Ripple trades were in August of last year. That's personal, just accounts. Right. That's also kind of, it works out that's also when we launched them onto our platform and made them available. Just like I just did Stellar Lumens and Zcash on Tuesday, and we'll be rolling that out next. So I always kind of like to be the guinea pig and try it out. The first ever Bitcoin IRA, and you might like this, the first ever holder of it was Ed Moy, the former director of the United States Mint.
Wow.
So ironically enough, the person that was in charge of both the greatest production of gold and silver in the world at one time and the greatest production of fiat currency in the world at one time also was the first to have Bitcoin inside of his retirement account. And he's done really well with it. He's just let it sit there and do its thing. And we've been working with Ed for many years in precious metals and otherwise, so I just that gave him the opportunity to be the first, and he jumped on it. And just cool little irony there, just understanding how the economic world is transitioning.
Really amazing. That is quite interesting. So people should be going to bitcoinira.com, and they can call over here and talk to a specialist or look around the site and learn all about the really unique product that you guys have created here. I'm very interested in it. I really should have gotten into it when Bitcoin was 700. I'd be much closer to retirement right now than I am. But definitely want to thank you for inviting me over here today, Chris, and for all of your insights. It's been wonderful.
Thank you for having me, Jason. It's been a pleasure.
Yeah.
And you're a guest anytime in Los Angeles. Come on by.
Thank you very much. And thanks, everybody, for watching. I'll see you later.